Welcome to the 2014 Retail Warehouse half-year review. It's been a good start to the year. We've recorded £888 million worth of transactions. That's 13.8% up on this time last year. The really significant news is what's under offer, and that's £700 million worth of transactions recorded as being under offer, so it should be an excellent start in volume terms for Q3. So picking on some of the detailed trends in the market, along with other sectors of the market outside central London, weight of money chasing the sector is the real driving force behind the transactions. There's still considerable institutional investment, but also overseas and property company interest in the sector. Turning to the trends in the sector, the recent price rises have really been driven by both the weight of money coming into all property investment classes, but also repricing of risk and a lowering of target rate of returns from the core retail warehouse sector. This isn't yet because of any rental growth, and the investment market is forward pricing this, but there are some signs that the recent ERV reductions we've seen are now being reversed. This is a good sign and one we'll monitor closely in the coming quarters. So turning to some specific deals, the quarter really got going in the start of the year with cornerstone sale of Bridgewater Retail Park to LaSalle. This was an open consented scheme with asset management angles, and LaSalle paid just over $26.5 million, reflecting 5.85%. The big news in the market came with an off-market deal of BL and partners selling Leamington Spa Retail Park. Here, the Ignis UK Property Trust acquired it for $72 million, reflecting an initial yield of 4.4%. Now, as always, there's a bit more behind the headlines. The real news on that is there were some real reversions and fixed uplift, and the equivalent yield reflected closer to 5%. Looking forward at what we're expecting to come, particularly from that big volume of £700 million worth of deals, we're waiting to see when Decca finally complete their sale in Cambridge. The market's expecting that to be around 5.25%. But the real news is Foss Park. That was part of a portfolio, and bids are in, and we're waiting to see where the market prices that. Biggest shopping park asset in the country, priced at $325 million. It'll be a real bellwether for the sector. Some of those £700 million worth of deals involve DTZ and our team. We've got 5 deals currently in solicitors' hands at present, and it's going to be a busy summer, not just for us, but for the entire market. I look forward to talking to you all again at the end of Q3, but if these levels of volumes are maintained, we're forecasting that this year could be a £3 billion year for the sector, and that'll be the first time we've seen that since the credit crunch in 2008.